Good afternoon from the New York Stock Exchange. I'm Caroline Woods coming to you from above the trading floor on this Tuesday, November 11th, Veterans Day. Banks are closed today, but the stock market is open for trading. Stocks are mixed in midday trading, although admittedly there's not a ton of action happening. We saw a big rally yesterday in hopes the government shutdown is nearing an end. The Nasdaq had its best day since May, but big tech is back under pressure today, giving back some of those gains. The Magnificent Seven tech giants are mostly in the red, with only Apple holding steady. Netflix, which isn't in the Mag 7 but has had a magnificent performance so far in 2025, is also climbing a bit. Nvidia is selling off after SoftBank disclosed it sold its entire stake in the company, $5.83 billion, back in October. Nvidia is still up more than 40% this year, but it's had a rough November. CoreWeave is one of the worst tech performers today. The AI infrastructure company that went public earlier this year is down big after its full-year guidance disappointed investors. CoreWeave now expects revenue between $5.1 and $5.2 billion, below analysts' $5.3 billion estimate. Overall, the S&P 500 is mixed on this Tuesday. Tech and consumer discretionary are lower, but sectors like energy, healthcare, and materials are all in positive territory. AppLovin is the worst performer in the index. Hewlett-Packard Enterprise is also dragging it lower. We're seeing weakness in names like Oracle, Micron, and Dell today as well. Tesla is lower, but its Chinese competitor XPeng is climbing after unveiling its next-generation humanoid robot and plans for robo-taxis next year. Competition is heating up in the EV and robot space. Beyond Meat is sinking after issuing disappointing fourth-quarter guidance. The alternative meat company cited an elevated level of uncertainty. It expects revenue of between $60 to $65 million. That's below analysts' $70 million forecast. Beyond Meat stock is down nearly 70% in 2025. Queer dating app Grindr is also under pressure amid reports it could soon go private. This comes after the chair of the board submitted a buyout bid and last week stepped down from his position. James Liu, who served on Grindr's board for more than 5 years, said he was resigning to focus on personal business pursuits. In October, Liu and another fellow board member made an offer to take Grindr private in a nearly $3.5 billion deal. Together, they collectively own 60% of Grindr's outstanding shares and offered to buy the rest for $18 each in cash. Shares are currently trading below $15. But there are some bright spots today. Nike is one of the top performers after a tough 2025. Deckers Outdoor, the parent company of UGG and Hoka, is also higher, along with stocks like T-Mobile, CarMax, Hershey, and Starbucks. Media giant Paramount Skydance is a standout. It's jumping after earnings. The CBS parent announced more cost cuts and layoffs and said it would raise prices for its streaming service next year. David Ellison, Paramount's new CEO, disclosed the company is cutting 1,600 jobs in South America as part of a divestiture of TV station operations. The studio is aiming for a 15% workforce reduction overall and $3 billion in cost savings. Even with job cuts, Paramount plans to spend $1.5 billion more on content and nearly double its film releases. Ellison is aggressively reshaping the studio, investing $7.7 billion for UFC rights and recruiting top talent, including the creators of Stranger Things. Not helping sentiment today? A new report from ADP showed private employers actually cut payrolls in October. The payrolls processing firm says companies shed an average of 11,250 jobs over the past 4 weeks. That's according to preliminary numbers. That suggests the labor market struggled to produce jobs consistently during the second half of the month. ADP had reported October gains of 42,000 just last week, but that only covered numbers through mid-month. Economists had been expecting the Bureau of Labor Statistics' official non-farm payrolls report to show a drop of about 60,000 jobs for October. That report, however, didn't come out because of the government shutdown. And finally, today is Veterans Day. A heartfelt thank you to all who have served and those who continue to serve. Veterans Day dates back to November 11th, 1918, when the truce between U.S. allies and Germany marked the end of World War I. It was signed at the 11th hour of the 11th day of the 11th month. The holiday was originally called Armistice Day and was renamed Veterans Day in 1954 to honor veterans of all U.S. wars, not just World War I, and that's exactly what we're doing today. That'll do it for this Tuesday. I'll see you back here tomorrow at the NYSE. I'm Caroline Woods.